So JP Morgan has issued a statement saying that they predict gold prices to fall to 1520 by end 2022. And to many investors, especially those new to gold, they might start to panic and sweat thinking that this is the start of the end. And I'm here to tell you not to worry and to really think deeper and not be spooked by all these price forecasts, right? I personally believe that gold prices will continue to rise in the long term, and in 2022, I won't be surprised if it hits $2,000 an ounce. And in this video, I will lay out what you should be paying attention to instead of all these random predictions by Wall Street banks. And in this channel, we cover everything gold and silver. So if you want to learn more about investing in precious metals, be sure to subscribe to the channel. Let's dive in. Now, the greatest trick the devil ever pulled was convincing the world he didn't exist. And I believe the second greatest trick is price forecast trying to get us to think short term about gold when we should be looking long term. So according to a news report from Kitco, JP Morgan is forecasting that gold won't be able to withstand the tapering from the Federal Reserve. They believe that the price of gold will slide down to $15-20 an ounce when the monthly bond purchases gradually ends, right? And if you want to be honest, the truth is that no one can accurately predict what the price of gold will be in the next 12 months, right? We can really hope and pray for a price, but that doesn't mean that the price will come true, right? The thing about predictions from banks is that they are not really there to help you and me. They are numbers that they just throw out, and these forecasts they come up with is because most probably they have a deeper agenda behind them. And if we look at other predictions from other banks, we can see that they are really all over the place. Like ABM Enro is bearish at $1,500 an ounce, while SocGen is somehow ultra bullish at $2,100 by the end of the year, right? So who's right? I believe that the biggest mistake is to worry over all these price predictions and start panic buying or selling your gold, right? And firstly, we kind of need to understand why banks actually make price predictions and why I just smile and laugh when I see any bank trying to crystal ball the market. So let's get it straight. Banks are all about making money. We know the deal. There's nothing really wrong about that, and every business has to turn a profit. Now, but every time I see a forecast from them, I believe that they are doing it to benefit their bottom line. Surprise, right? Now, if you think that they are doing it to really try to influence the gold market, that probably isn't the reason why, right? I don't believe you can really move the gold market with just a single statement. It is too deep a market, and this really isn't Bitcoin where you can just simply come up with a tweet like Elon Musk and the entire market spikes or crashes, right? The gold market is over $10 trillion strong, and truly no institution can really move it up or down for long. Now, the main reason why I believe banks come out with their forecast just boils down to one thing. They want to look smart in front of their customers, and if they get the prediction right, that brings them more clients, right? It's as simple as that. So the thing is that every bank on Wall Street today, they have their own research department, right? Smart analysts that graduate from Harvard or Princeton, crunching numbers, trying to predict the future. And they love making predictions because if they get it right, they can go around proclaiming that they are clairvoyant and they are the best on the block. And because of that, naturally they'll get more clients because they were right and they make more money. And if they get it wrong, hey, it's the market forces and the world's unpredictable, right? Now, the big issue I have is that no one can really predict the markets, especially the price of gold. A lot of people are betting on if the Federal Reserve is going to go through the taper and if interest rates might be raised, right? But I think that is a bet that you really can't guarantee the outcome. If the stock market starts shaking and looks like it's going to collapse, will the Fed backtrack on the taper and start pumping more money into the system, right? Will they suddenly just drop more cash into the system, reinflating everything up? And, maybe all they just need to do is just stop the taper and just buy bonds as usual, right? And I don't know what's going to happen, and truth be told, the big banks also don't. Now, if you look at their forecast for the last few years, you can see that while they got the direction more or less right, they underestimated the price of gold, especially in 2019 and 2020, right? Especially in 2020, bet they didn't see that coming, right? No one could have predicted what happened in that year. It was really a black swan event. And that is why we shouldn't really put much faith into price predictions. Anything that they say, I take it with a pinch of salt. And you know what is the funny thing? Price forecasts are always adjusted when big things happen in the market. So if the Fed decides not to taper in 2022 or slows it down, predictions will be updated and the goalposts will once again move. Now, I believe there's a better way to think about gold, and that is to look at the bigger picture, right? Now, we all know that gold has been used as sound money for over 3,000 years and has always accounted for excess amounts of money being printed, right? People all over the world buy gold because it helps to preserve their purchasing power over a long period of time. And that is what I believe we should be focusing on, the long-term outlook for gold. I'm talking about 5 years, 10 years, 20 years, and not just the next 5 months. And I do this by tracking 3 indicators that tell me if gold is still a good buy for the long term. And the best part is that you don't need to be a rocket scientist to figure this out. So the first big indicator I want to share is tracking real interest rates, right? So it's basically how much you are earning on your cash if you put it into a bank after factoring in inflation, right? Because gold is negatively correlated to real interest rates. If real interest rates rise, gold tends to fall, right? So there are many ways to calculate it, but I use a very conservative calculation using official numbers. So if we look at the highest interest rate possible in the savings account today, which I believe is around 0.7%, and a CPI inflation rate, which is around 6.8%, which is very high, right? So if we take 0.7 minus 6.8, we have a real interest rate of minus 6.1%. And that means that your cash is losing around 6.1% every single year, right? Cash is getting weaker. And I believe that this is a great indicator to check the sentiment of gold. What's the point of staying in cash when you are losing purchasing power every single year, right? And that's why you see every single asset class in the world generally going up, including gold as well. Now, so long as the real interest rate is negative, I will personally be holding on to my gold and adding to it. All right, so the second indicator I'm looking at is if central banks are buying or selling gold. Now, the thing about central banks is that they are drastically different from commercial banks. Commercial banks are all about making profits, and sometimes they take big risks to do so, right? Now, central banks are supposed to protect the wealth of their citizens, and that's why you see many central banks like Singapore, China, and Russia, and Ireland as well, buying gold aggressively, even at the 1700 levels, right? They know that the dollar will be losing value over time, and they are better off just holding some gold, guys. So unless I see central banks start to really offload their gold and dump it, I will still be holding on to my own gold, right? And from what I see, more banks are buying gold than selling gold. And now, here comes the fun one. The final indicator is the US debt clock. Now, if you haven't seen this before, it's basically a clock that shows you how much money the US government owes, and it's terrifying to just look at it. Now, as of today, we are getting dangerously close to $30 trillion, and if I'm not wrong, the clock has always been counting up. It's really horrifying to see how much money is in the system and how broken the entire financial world is ever since we left the gold standard back in 1971. And if you look over here, you can actually see how much the theoretical price of gold can be if the money supply is divided by the amount of gold present in the world, right? So we are looking at around potentially $21,000 an ounce. Now, before you say that that is impossible, just remember that Bitcoin went from $1 to over $60,000 in just 10 years. Let that sink in. Now, I'm not saying that gold will break 20 grand, but if a monetary reset were to happen, 20 grand might be on the cards. And that's why I really prefer to look at the long-term price of gold and not really rely on yearly price predictions, right? As long as the national debt continues to rise and Congress keeps raising the debt ceiling, I will still be buying gold in 2022 and beyond. Now, in fact, I think I'm going to get more gold coins very soon, sometime around this quarter. Now, the thing is that JP Morgan's 1520 price forecast might come true. Anything could happen, right? If the Fed does go through with the taper, I won't be surprised if gold falls to that level because of a knee-jerk reaction. But I personally believe that the price of gold will continue to go up for the long term as it protects our purchasing power, right? It's true that gold hasn't performed much over the last year, and I think that a big part of it is because a lot of attention was given to Bitcoin, right, the new kid on the block. But if you look at gold's chart, it looks like a very nice slow consolidation to me, and I believe the longer the consolidation, the firmer the floor price is, and the more confident I am in holding gold as wealth protection. Now, if gold were to suddenly spike to $3,000 next month, honestly, I'll be more worried than happy. I love buying gold when there's very little media coverage and when people all believe that it is out of style. Now, honestly, all you need to do is to leave YouTube and go take a look at mainstream coverage, right? The only thing you'll hear is stocks, S&P 500, and Bitcoin. I don't think they have been taking gold seriously for the last few years. If anything, they probably have been mocking gold. And the more people laugh at gold, the more confident I am in my decision to buy more gold. So there you have it, guys. Be very careful when you look at price forecasts, not just from banks, but from anyone, myself included, right? Instead, just keep focusing on the big picture and track the real stuff that matters. Now, gold can rise to $2,000 next month or fall to $1,600, but as long as the world keeps printing money, I really believe that the price of gold will continue to rise over the next decade. So let me know what you think. Where do you think gold's price will be in 2022 this year? Do you have a prediction of your own? Let me know in the comments below. And if you enjoyed today's video, be sure to smash that like button and subscribe for more gold and silver videos, guys. Thank you all for watching, and I'll see you soon.